Let's look at the advantages of money market funds. Why they are a perfect vehicle for conservative investors. Money market funds are low-risk investment vehicles that invest in short-term, high-quality and highly liquid debt instruments. So here are the main characteristics or the main disadvantages rather of money market funds. Number one here is low risk. Low risk is a very important advantage. Money market funds are considered among the safest investment options as they primarily invest in short-term, high-quality debt securities like treasury bills, like commercial papers, or certificates of deposit. And this makes them an ideal vehicle for conservative investors who are looking to essentially preserve their capital and as well as making, a kind of marginal profits, a marginal level of returns on their investments. And so they possess low risk. Number two is liquidity. When it comes to the matter of liquidity, money market funds are highly liquid, meaning investors can typically buy or sell, their shares quickly, very easily, often the same day. You enter your order the same day, and your order gets executed the same day. And this makes them an excellent choice for investors who need a kind of easy access to their fund without losing significant uh, significant values. There's no delay, there's no hitches. You simply key in your orders, execute your trades, and you are able to liquidate your investments. And it's quite an excellent advantage. Number three is capital preservation. Capital preservation, discover that the primary objectives of money market fund is to preserve the value of the investor's capital. That's priority number one, while at the same time providing a kind of modest return. That's an added advantage, actually. These funds they are designed to maintain a stable net asset value, usually $1 per share, ensuring that investors, our principal remains protected. And net asset value here, is the value of the entire instruments or the entire securities that the funds, invest in. By the time you sum up everything, to give you the net asset value of the fund. Number four is diversification. While money market funds are focused on short-term debt instruments, they often hold a diverse range of instruments. And this particular practice tends to provide adequate diversification for the fund, which helps to maintain safety and keep their investors keep them safe. Both the investors, and the investments are actually safe as far as this particular instrument is concerned. It provides added safety to their investor. Number five is steady income. Money market funds generate income through interest on short-term securities, on short-term, debt instruments they hold. While the returns are typically lower than what is obtainable, in equity and bond funds, they offer a relatively stable and predictable income stream, which can be appealing to income focused, return focused investors like those who are about to retire or retirees, or maybe those who don't have enough risk appetite to be able to stomach the level of volatility in the stock market. Please subscribe to this channel and like this video, and you may drop a comment in the comment section if you deem it necessary. Number 7 is number 6 rather is no fees or low fees. No fees or low fees. So in this regards, money market funds, have a very low expense ratio, especially compared to other types of mutual funds. This makes them a cost-effective way to earn returns, in a short-term investment. They're relatively kind of low cost. They don't really charge much fee, if at all they charge any at all. And so that makes it a kind of cost effective for their investors. The fees here will not really eat into your returns at the end of the day. Number 7 is higher returns than a saving accounts. You discover that while money market funds are not designed for high returns, they typically offer a higher yield than your traditional savings accounts. And your savings accounts, your checking accounts, and other traditional accounts you maintain with your banks, especially during times of rising interest rates. This makes them an attractive option for short-term, parking of cash. You want to park your cash somewhere for the short term, and you don't want to invest in either a CD, because the returns in CDs are usually very low. And you could consider a money market fund. Number 8 is tax advantages. Some money market funds, such as municipal money market funds, invest in short-term municipal securities that may provide tax-exempt income. This can be beneficial for investors in high tax brackets who are looking to reduce their taxable income. For those who are in the high tax brackets, and they want to reduce their taxable income, they can invest in money market funds because the tax here is kind of favorable. It's low. The tax implication of investing in these funds is quite low. Number 9 is convenience. So many money market funds are easy to invest in and to manage because many investors can access this investment through your brokerage accounts or your retirement accounts, making them a convenient option for managing cash or maintaining an emergency fund. So it's very easy to access. Through your brokerage account, you can very easily access these funds, and then you can very easily buy and sell and manage your fund, and to be able to maintain an emergency fund whenever it becomes necessary. Number 10 is safety in economic uncertainty. Safety in economic uncertainty. During times of market volatility or economic uncertainty, money market funds tend to perform better than stocks or long-term bonds, due to their focus on safety, on liquidity, and because of the short-term instruments they hold in their portfolios. This makes them a good option for risk-averse investors, or a kind of, temporary safe haven, during market downturn. When the market is down in a typical bear market, then this money market fund can provide succor, to investors. The advantages and disadvantages makes money market fund a popular choice for conservative investors, those seeking liquidity who are looking to, park their cash temporarily while earning a decent return on their investments.